Now, one of the big mega trends is obviously cloud computing and AI. They're being led by the giants, Amazon, Google, and Microsoft. But our next company in focus is Bigtincan. Now, it is a SaaS that is obviously cloud-based, and it also uses AI. So those are obvious links. But Bigtincan CEO David Keane is here with me in studio. David, welcome. Look, I can't help but think that Bigtincan also plays into this shifting demographic story, and part and parcel of that is the way in which we work and the dramatic way in which work has changed, in terms of mobility. Would you agree?
Oh, no doubt. In fact, those trends you talked about, cloud, mobile computing and AI, they're really impacting how many of us do our jobs every day. And what we're seeing from our customers is that those trends are driving the productivity of humans. And in today's economic environment, getting productivity from every resource is becoming even more important to enterprise customers.
Go ahead.
Yeah, so we see those trends as being things that will be ongoing and are going to help a lot of people to be more successful in the future.
Okay, but I will say Bigtincan, the name, doesn't give it all away.
Oh, yes.
So what is it that you do?
Oh, yes. So we build software used by some of the world's leading companies to help them to empower their revenue line. We're helping human beings to gain additional sales and revenue by engaging smarter with their customers every day. Those are global organizations like Nike, Fidelity, Citibank, and a bunch of others that use our technology to make sure that every customer engagement counts. And they're creating the buying experience of the future for their customers. And they're telling us that our software is really driving their revenue line. And again, particularly in today's climate, that's an important technology for them to be able to take advantage of.
But you're not a CRM, right?
We're not a CRM.
You do, you produce content. Mm-hmm. What exactly is it that you do?
Yep. So we have a software platform, as you mentioned, it's a SaaS cloud-based platform that salespeople use on their computers or on their mobile devices that works with CRM platforms like Salesforce.com, and it delivers content and information and learning to each individual person based on AI algorithms. So imagine you're out there about to visit a customer, you're working at a company that's using the Bigtincan technology. Our system is going to automatically organize and deliver the information and knowledge you need to help you have a better engagement with that customer.
So you're not a content company?
We don't build content. Customers build their own content. We're selling the platform.
What is the competitive advantage? I mean, is this unique?
What's
the moat?
When this company started in 2011, we were really pioneering this whole idea. Before Bigtincan, companies didn't have tools like ours to help them. They were relying on intranets and SharePoints and tools that were just legacy technology. Our platform came along, was really one of the first in the world to be able to combine the functionality that customer-facing salespeople need in today's economy. And that's led us to have some amazing competitive advantages in terms of the technology breadth that we can bring to our customers, but also this understanding of engagements between people. We're collecting millions of data points every day about how human beings work together and about how the revenue line is formed for these leading companies. And that data is a huge benefit for our shareholders and our company as we build value in the business.
Now, what have your conversations been like with some of those big names or enterprise customers? Because we sort of know what's going on there in the macro environment.
Yeah, well, look, we know that organizations all around the world are looking at how they can optimize their businesses and be as efficient as they possibly can. And if you think about the change from earlier this calendar year, when many organizations were just hiring as fast as they can, to now a world whereby they're more cautious on that area. They need each resource, each human resource, to be as productive as possible. And what they're telling us is this focus on individual productivity needs software like Bigtincan's products, because without that, they're going to be stuck. They're not going to be able to do more with either the same resources or less if they have to adjust. And so what we're hearing from our customers all over the world is that productivity is key to our future and certainly addressing global inflation.
Okay, so you're telling us that Bigtincan is a need, not a want for businesses. So any scale back in CapEx wouldn't necessarily impact your business?
We were able to show investors at our most recent financial results that our average penetration rate across our customers is roughly about 26%. So we're still in a place whereby it's early days for these customers coming into Bigtincan. And in fact, any scale back in humans could actually result in an increase in revenue for us. Because if you think about it, if you have to address your human resources, to obtain the same results, you must deliver productivity for each resource. And so we're seeing our software being a need for these organisations who have to deliver results for their business.
Okay, so you are talking about cost control at your customers.
Yes.
Market wants to know about cost control at listed tech companies.
Indeed.
What's the story?
Indeed. So we talked to investors earlier this year about our commitment to a cash flow break-even position for our company in FY23, and we're certainly on track to achieve that. We're also seeing some interesting, I think, changes in our market as the Australian dollar continues to fall. Now, interestingly for us, because the majority of our revenue is in US dollars, we're seeing that actually translate for us in terms of assisting our business as we think about our growth in the markets. And so we believe that our commitment to that cash flow break-even position, based on our full year FY22 adjusted EBITDA result of $4.1 million positive, and that was a $10 million turnaround from the previous year. So we've had a real track record now of demonstrating that we can build a profitable growth company. Okay,
do you put any targets on when that profitability will happen?
We've been, so adjusted EBITDA positive in 22. We've told investors we will materially improve that in FY23. I think that's an important message for investors to feel confident that the company understands its future revenue flow. We're working with these bigger organisations who can give us a bit of a view of where they're going, and that gives us the confidence to give investors that outlook over the next 12 months about where we'll be. And so we think that, combined with the cash flow break-even commitment the company has made, is really giving the company the structure it needs to build on.
So what about annual recurring revenue? I mean, I think there was a 43%, you said, of the base renewed for FY23. So there's a little bit of semantics in there. Explain what that means.
Sure. So our annualized recurring revenue at the end of FY22 was $120 million. So we've been building and building that recurring revenue base. Now, of course, recurring revenue means it has to recur. And so we were able to go to investors earlier this financial year and say, hey, we've already got 43% of that $120 million base renewed. And that's up from 31% in the previous year. It's a pretty significant improvement. And the reason for that improvement has been the combination of technologies and capabilities that we have at Bigtincan, combining our sales content platform with our sales training, learning and coaching platform. It's really encouraging customers to renew early. And that's giving us, again, real confidence on not just our profitability position, but also our cash position.
Have you had to sacrifice growth to achieve these targets, or to potentially achieve these targets? I mean, is there sort of a conversation that's ongoing in the C-suite about what you'd be willing to sacrifice in terms of growth to make these targets actually achievable?
Yeah, it's a good question. I mean, we've been quite fortunate, or maybe the timing's just been good. We did a pretty major acquisition of another US-based company last year, just past the 12-month anniversary, actually, of that Brainshark acquisition. And that helped Bigtincan to grow significantly in size. And we've discovered and been able to communicate really strong synergies in the basic operations of our business. So it hasn't been that we've had to make material changes in terms of how we think about the future. The combination of the Bigtincan historic business with that larger acquisition, again done about a year ago, has given us this opportunity to optimise the business. So we can come and give those assurances and views to shareholders, whilst making sure that we have the resources we need to execute on the growth of the business. And I think the management team feels very confident that, irrespective of global market conditions, organisations need to empower their teams, and they need software like ours to do that.
Is part of the strategy, though, to grow by acquisition?
Look, we've used acquisition in the past where there has been a couple of key fundamental pillars that we've been able to meet. Number one, of course, is accretive deals. We've done acquisitions where we're able to add revenue that was at a lower multiple than our trading multiple. And that's always been something core to us. And I think the ability of the company to prove that it can turn that into adjusted EBITDA positive results in this recent financial year gives investors confidence that that works. We've also done acquisitions that are really all about technology. We've done deals that have brought tech like conversational intelligence, augmented and virtual reality, and additional AI capabilities to really accelerate the roadmap, but also to reduce risk. In any tech project, there is always risk. But if we can find amazing technology and great people, we can bring it to the company and minimise risk and continue growth.
So you talked about the Brainshark acquisition. What about technical debt risk? I mean, how does the integration of all of this happen? A lot of people describe it, as to sticky taping on all of these sort of external software functions that then have to be integrated at a cost. And potentially sacrificing efficiencies as well.
I think you have to think about it in the other way around. What we have to do, and we've done a lot of work with our team, amazing team all around the world, to look at these deals and say, where can it actually accelerate the combination of these technologies and where can that actually reduce cost. And it's really interesting when you look deep into these deals. If you can do something that actually connects your solution end to end for your customers, you can actually empower your tech teams with the technology they need and the support they need to actually lower your cost to serve, which is an expression that we use a lot internally. We can actually lower our cost to serve customers by connecting these bits together. And so I think acquisitions where they make sense are important. But of course, it's our amazing tech team around the world that builds the vast majority of the products that we bring to our customers. And they're executing on that organic strategy today.
What is the thesis behind the acquisition of LiveTiles, or potential acquisition, I should say?
Yeah, look, I think it's worth reminding shareholders and investors that we've made some announcements to the ASX. I think there was an article that came out in one of the publications talking a bit about that. I think the way to explain that to shareholders is a couple of things that still are true to us. Number one is we're always looking at, are there opportunities to accretively improve our pure financials? And I think there have been some indications that we see an opportunity there with that deal, where there may be ways to not just grow our revenue line and our annualised recurring revenue, but also to be able to grow our adjusted EBITDA position. I think there could be opportunities there. But I think at the end of the day, our view is if there are ways that we can continue to expand and extend our capabilities, go deeper into our customers, and do that in a way that, as we proved with Brainshark, will actually impact our EBITDA, drive profitability, but also make our solution more connected for our customers, they're the things we should look at. Now, that deal has a long way to go. We're still in the very early stages, but I think it's worth thinking about that strategy we've had here at Bigtincan of using M&A where it fits those strategic pillars.
So you're not sort of risk averse to buying a loss-making business?
Well, that business, according to its numbers, is not a loss-making business anymore. So I think one of the things about that particular business, again, looking at the public numbers, is it is a business that's washing its own face. And then the question comes, is Bigtincan able to, from a purely financial metrics point of view, able to do what it's done before? Integrate that, optimise the cost to serve, deliver a growth platform that can extend that into the future, and do it in a way that's not reducing our earnings, but actually improving them.
Okay, so when it comes to, capital raises, what's the story? I mean, talk to us about the balance sheet and capital position.
Yeah, look, at the end of June, we had roughly $40 million of cash. We've talked to investors about being cash flow break even this year. All that sort of stuff is on track. So, we certainly are looking at what impact a LiveTiles transaction would have. Still early days to know exactly that position, but I think it's too early for us to give investors more of an insight other than to say we're looking to understand more about that business and we'll come back to the market with data at the right time.
Okay, so M&A is in the future potentially in some way, shape or form. That's pretty much a guarantee.
Yeah, we're looking at it. It may not. I mean, we've got a really strong platform now. And I think it's worth reminding all of our investor base, but also the whole market, we've got a really strong platform. Some of the world's largest companies are turning to every day to empower millions of people to be successful. We've got a strong platform in place today. Now, of course, it does make sense to look at ways that we could accelerate the future, maybe bring some additional value forward. But we think the company's well placed with the technology we have today.
I think the US, correct me if I'm wrong, if it's been updated, accounts for about 90% of your business.
It does.
So where to push to next? I mean, has growth topped out there? Do you need to look to Asia, Southeast Asia?
We have a long way to go in North America.
Okay.
A long way to go.
That's where you're based.
Yeah, I'm based out of Boston. Mm-hmm. So actually this time of year is a great time to be in Boston. People have been to Boston in the fall. It's the best time of the year. But no, we think we have a long way to go in North America. Tens of thousands of companies are still using this legacy technology with intranets and SharePoints and email blasts to communicate to their customer-facing workers. They have not made the jump to modern technology. So if we can get there and help those organisations to make that connection, to get to the next level in their own organisational structures, and we will see, it's unknown, but if those organisations are pushed to do that faster because of macroeconomic uncertainty, we want to be well placed in North America to take advantage of that. Now, having said that, we have a great team here in Australia and, of course, across Asia and in Europe, and we believe there are opportunities for us there as well. But I would say a long way to go in North America. Okay,
and is that sort of bringing on new customers primarily, or is there a way to upsell to the existing customer? Are there new product launches that you can look to as well? Do you have a timeline for any of that?
We talk a lot about what we call our net retention rate, the NRR. What the net retention rate tells folks is, of the customers we had, say, at the beginning of a period, if they had $100 spend with us, at the end of the period, what's their spend with us? And this takes into account churn, so people leaving our platform, as well as those people that are expanding. and our number for FY22 was 108%. So what we're seeing is that more people, that the existing customer base is actually spending more at the end of the period than they were at the beginning of the period. And that gives us great confidence that our cross-sell and upsell strategy is working. We know it's working. The numbers show us that it's working. So if we can keep thinking about growing that NRR, if we can keep showing that customers, they like the product, they're sticky with the product, but they believe that they can buy more, I think that's one of the things we can prove again this financial year.
So when you think of the future, I mean, obviously it's a pretty tough time in markets right now, particularly for these growth tech companies. We don't need to go there, although I'm sure sometimes you wake up and think you wish you didn't have, your alerts coming on your phone about the share price. But, blue sky, Bigtincan, 5 years, data-driven sales. What does it look like?
Gartner, the market research company, has said that data-driven sales will impact the majority of transactions by 2026. You're talking about trillions and trillions and trillions of dollars of engagements being driven by data-driven sales. Bigtincan is well placed to take a significant share of that market into the future. We've been doing this now for a number of years. We've built our US-based team. We've built the technology that underpins that. And we see an opportunity to keep doing that into the future. And I think that's the belief we have in this business, is we've got an infrastructure, a team, and a platform that we can build on.
Now, obviously, you're in Australia, leaving Boston in the lead up to Halloween, which
it's
questionable. What are you doing here? Are you meeting with shareholders? Are you meeting with key stakeholders, customers?
Yeah. Look, I get out to Australia for 4 odd times a year, and it's a really important thing because Australia is very much Bigtincan's heart and soul. I know we have a whole bunch of folks who may be watching this interview that are based in our international teams, and they're amazing and contribute hugely to the future of this company. But we started here in Sydney, and we certainly believe that our investments here in Australia are core to our future. So I get out to meet with our teams that are doing the incredible work on building our platform for the future. And I won't share too much with shareholders, but I think, look, we're convinced that technology innovation that we're driving is going to be the future of our company. And I can't wait to show that to folks more in the future.
David, thank you. It's been nice to see you in person.
Indeed.
Yeah, thanks for coming in. Really appreciate your time.
Thank you so much.